What's going on, y'all? Welcome back to Wealth Hacker Lab. So on this channel, we talk about how to accelerate our wealth building, and we do that through investing, whether it be investing in the stock market, investing into real estate, investing into online business. Now, one of the areas that I haven't done a good job in growing my wealth is through real estate investing. I've tried a few physical properties, didn't quite work out for me. You can check out an older video where I talk more about that. But for me, real estate investing has been through real estate notes or real estate syndication or Fundrise, an online real estate platform. But recognizing that I don't have the expertise to talk about real estate, I want to talk about a real estate investment opportunity that I recently took part in. And to answer your questions on this investment real estate opportunity, I wanted to bring in a real estate investment expert, which ain't me. So who I'm bringing in, his name is David. He is from the Military to Millionaire website and also podcast. I've met David at FinCon. I've actually was just recently on his podcast. So he's a military guy, Marine, hoorah.
That's a war face. Now let me see your war face.
But also has built his wealth through real estate investing, and he was one of the ones, he actually is the one who introduced me to this real estate investment opportunity. So what is this all about? So I sent some questions to David, and he recorded his answers for you all so that you could learn about this, how it works, and if this makes sense for you. So without further ado, let's find out what David has to say about this real estate investment opportunity.
Hey, what's up guys? I'm Dave from the Military Millionaire community, and today I'm here to talk to you a little bit about the syndication process and how people invest in these large real estate acquisitions. And I'm going to do that by answering 4 questions that Jeff sent over to me. The first one being, how does real estate syndication differ from real estate investment trusts like Fundrise? The easiest way for me to answer that is to break it into pros and cons and just talk briefly about a little bit of the differences. So a real estate investment trust, or REIT, the pros for them are that they're liquid. So it's a big fund, so you can kind of invest money into it, pull money out of it. There's thousands and tens of thousands of people investing in these funds, so it kind of gives you that sense of confidence. And the barrier to entry is pretty low. It doesn't take a whole lot to get into these funds. It's much like your traditional, kind of like an index fund where you're investing in this fund and it goes up and down. Some of the downsides are that they're very volatile, like stock markets. And you don't really have a say in what asset you're investing in. This fund, you invest in this fund, and the fund buys real estate here, and then buys real estate there, and it might buy this kind of real estate, then it might buy that kind of real estate, and you have an idea, but you don't really know what property you're buying. So you can't like tangibly analyze and see if that's a deal you would want to be invested in. And also, you don't really know who's operating. And to me, that's a very important piece, is the operator of a deal. And so that's one of the big downsides for me, is you don't really have a say in who's operating your deals. It's this fund. Some of the pros of syndications are that you get to know who's operating the deal. You are investing in a team, in management, in operators, and so you know who controls that asset, which is huge for me because I've seen really good assets not do so hot if they were poorly managed, and I've seen really bad assets turned around when a new team bought them and added value, and they became incredible assets. So I think the operator is almost a bigger piece to me than the deal. That being said, I also love that you get to analyze the deal. So I get to sit and go, do I like that internal rate of return? Do I like that preferred return? Do I like that cash flow, that value add, that strategy? And you get to know what the property is that they're... So for example, you might have these operators that you love, and you might buy a property with them and then invest in another property with them, and then the third one comes along and you're like, hold off on this one, wait for the next one. It's not really my type of thing. And I like having the ability to do that and analyze different deals rather than just being in a fund where you don't really know what's getting invested. With the syndication, it's also possible to do a 1031 exchange, which means that you can defer the taxes to later, and you get depreciation benefits, which is a huge tax bonus that real estate investors get based on aging properties and being able to pay for repairs. Also, one other fund, and this kind of goes into the REIT, I forgot to mention this as a con, is syndications don't have all these crazy fees. They're much lower fees, whereas a REIT has some of them have very exorbitant fees, and it just makes sure you're looking out for what their fee structure is and how much of the investment return they actually give back to you. They're only required to give 90% back to you in a REIT, whereas a syndication has preferred returns and they give you more of your money back. Now, some of the cons for syndications, it's not really that liquid. You're kind of in it for the long haul for that deal. And the barrier to entry is higher. It takes more money to get into one of these because you either need to be an accredited investor or a sophisticated investor with some decent capital, and we'll touch on that in a minute. Also, you need to understand how to look at income and expense reports as well as due diligence, and you should be able to do that with anything that you invest your money in, but because you're investing in a specific deal, you definitely want to be able to understand the numbers on it before you put your money into it. Question number 2 is, what are the biggest risks associated with something like this? And the first one, most of them are outlined in your PPM, which is the private placement memorandum. And this is going to discuss a lot of these risks. I will say that in 2009, at the bottom of the last crash, the residential mortgages had a 5% delinquency rate and multifamily only had like a 1%. So it's a little bit safer, I think, partially because when people can't find a place to live, they flock to apartments because they're a little bit more affordable. So they help people be able to survive a downturn if they get kicked out of their house. So it makes it a little bit more recession proof. One of the biggest risks with this is poor management. As I said, a poor operator can take a good deal and kind of ruin it. So you need to know who you're investing with. You know they have some credibility and a track record. But the nice thing with the syndication is that you're limited to the amount of money you put in. You can't lose any more than that. Now, I've not really seen that happen, but the point is that this is non-recourse debt. So the bank's not going to come after you and make you file bankruptcy if you can't repay the loan, especially as a limited partner. You're really only going to be able to lose the investment that you put into it, which is not good and probably hopefully won't happen to you, but at least you know your worst case scenario is losing that money and it's not going to cost you anything else. The third question is, can I talk about the process? How do I find properties? How do I find investors? What goes into a deal like this? So first, I want to just break down the syndication process real quick. A syndication is nothing more than a pool of investors coming together to buy a larger acquisition than they would normally be able to afford. Prime example of this would be a Ferrari. Let's say I want to buy a Ferrari, but I don't have 200 grand. So I find you and your buddy Jimmy and my friend John, and we all pitch in 50,000 and we buy a Ferrari. We say, hey, every 4th day, it's yours. That could work. Now, granted that a apartment will hopefully appreciate, and Ferraris don't always appreciate, but you understand the concept. There's 2 different kinds of funds that are primarily used for buying large syndications. There's a lot of different ways to do this, but a 506B and a 506C. And the 506B says that you can have all accredited investors and up to 35 sophisticated investors, and then you cannot market at all because it allows sophisticated investors. So an accredited investor is somebody with $1 million in net worth, or who makes $200,000 a year, or with a spouse makes $300,000 a year. And a sophisticated investor would be someone who hasn't quite met the accredited standards yet, but it can be reasonably assumed that they understand the risks they're taking on. So for example, if I was to invest in something and I'm not accredited, then I have to understand, like, I have done some real estate investing, I can prove that I know what I'm getting into, and so I can assume that risk. And they can only take up to 35, and because they allow sophisticated, no marketing allowed. 506C is only accredited investors. So they can do general marketing, some basic advertising, and talk about the deal a little bit more, just because there's no sophisticated investors allowed. So everybody in the deal is assumed to understand the risk, or at least be able to lose a amount of money or have a large income. With all of these deals, there's a GP, general partner, and an LP, limited partnership. The GP are the people who operate the deal. They do due diligence, they do inspections, and they manage and operate everything. The LP side is the investors who just kind of put their money into the property, invest, and they just sit back and enjoy the ride. So it's much more passive, much less time induced. If you're going to do the GP side, make sure you talk to a Security and Exchange Commission attorney, an SEC attorney, and have them help you structure all this. For finding deals, a lot of this just comes from relationships with commercial brokers in your area. You could also talk directly with mom and pop owners, which are, you know, a family or a small partnership that owns real estate investments and whatnot, rather than going through like Fundrise and buying a property from them. You might go to local mom and pop who owns an apartment and just ready to retire. You could also just look on the MLS, like LoopNet, Realtor, Zillow. LoopNet's more for commercial properties. I'm not gonna lie, the market's kind of hot right now, so some of the stuff you're seeing on LoopNet's not really ideal to buy as an investor because you're gonna pay a pretty penny for it. So relationships with commercial brokers and then marketing to networking with mom and pop owners are the best. How do you find investors? Networking, content marketing, getting out there. So because you have to have a prior relationship with people who invest in these deals, you can't just walk down the street and say, I'm buying an apartment, you want in? I'm gonna do this, you wanna invest? You have to be able to prove that you knew them previously. For example, I'm talking to someone who was a dad of one of my friends in high school, and we stayed in touch. And I've got a couple of people like that from high school that stayed in touch. They see what I'm doing, and they're interested in investing with me or in me, or however you want to look at it. There's also people I've met networking through YouTube and podcasting and or going to meetups and going to events and going to conferences and just telling people what I do, and then we build that relationship, because you have to have that relationship pre-existing. And then also content marketing. So what is content marketing? Content marketing is huge. For one, it is having a YouTube channel, having a podcast that allows you to get out and put yourself out there and tell people what you're doing, and then if they like it, they come to find you and talk to you and get invested with you. So prime example is I'm filming this video for this channel because I'm putting myself out there, giving you guys some information. And if you were to like it and you wanted to come find me, you could go to militaryMillionaire.com/investors. You fill out some information there. We get in touch. We build a relationship. Maybe we invest together down the road. Or you watch it, you learn something new, you move on. But it's putting myself out there to help build my network and also to just help educate people. And that's a good way to get yourself out there and help find potential investors, because the most important part is personalities clicking, credibility, and trusting each other. It does take a lot of time and resources to do the general partnership side of a syndication. It's much less time invested to be a limited partner. You just kind of understand the deal and you sign some documents, hand in the cash. So large apartments though, like this, a normal house takes 30 days to close. A large syndication might take 60, 90, 120 days to close, maybe even more. And so the process is just longer because the due diligence is a lot easier on one house than it is on a 100-unit apartment complex. And you need to plan out if you're putting in a pool and zoning, and there's all kinds of things to consider with a large apartment that don't really matter as much on a small residential property. The fourth question is, for an investor who does not have accredited status, what are some other real estate investments they might be able to get into? Well, you could just do single and multifamily housing. So like a small, 10 unit or whatever. I mean, I bought a single family on my own. I've paid for duplexes on my own. I've bought a 10 unit on my own. And then I've done a partnership, like a 50-50 split with someone for a 40 unit. And so there's a lot of options out there for not having to do syndications. It's just a matter of financing and creativity. You could also just become a sophisticated investor, and then you can invest in these with the capital you have without having to do all the craziness of being a general partner. One of my favorites is house hacking though, especially if you can use the VA loan or even the FHA loan. You buy a primary residence like a duplex, a triplex, or a fourplex. You live in one of the units and you rent out all the other rooms, and that allows you to build equity with other people paying your mortgage down. Or you could even do like me right now. I'm stationed in San Diego, and I'm paying $3,000 a month for rent, but I'm renting 2 different bedrooms out on Airbnb. And if I make $2,500 that month on Airbnb, then I'm really only paying $500 for rent, and I'm able to save the rest of it to reinvest later. It's a lot of money I save every year by renting out rooms in my house. It's not always convenient, but you learn about landlording, you learn about Airbnb, and you save money to reinvest. It's kind of like bootstrapping and side hustling. So I really like house hacking, especially if you're just getting started in real estate. And then finally, you could do private money lending, which is, if you want to lend someone 50 grand and say, give me 12% interest, and then they go buy real estate with it. Or you could do private money lending and do equity partners. So you say, hey, I'll pay $50,000 towards this property, but I want half the equity, and then it's a 50-50 partnership. You get half the cash flow, you get half the tax benefits, you get half the profit when you sell, and you can kind of negotiate these things with an investor that has time and knowledge to go and invest if you just have the money and want to invest. And the nice thing with that and with syndications is that if you use self-directed IRAs, you can take the money from a self-directed IRA and you can turn around and put it into a private lending with somebody on real estate or into a syndication. You can utilize that money, which is really cool and a nice benefit. Once again, guys, I'm Dave from the Military Millionaire community, and I really appreciate Jeff letting me on this channel to talk to you. Hope you learned something today about real estate and syndications. If you got any other questions, don't hesitate to reach out.
All right, y'all, I hope you enjoyed this video. One of the main reasons I wanted to put this out to you is that I just want to show you that, yes, the market is going to crap right now, but also to show you that there are other ways to invest. Now, many people think that you have to do it the traditional way. And you have to buy mutual funds, you have to buy ETFs, you have to buy stocks. And I just want to show you that if you want to build your wealth, that there are other opportunities out there that you may not know about. And that's why it's all about getting the information. It's all about connecting with others. I mean, that's how I was able to learn about this opportunity, is all because of connection and networking and just going out there, pressing the flesh, which you don't want to do right now with coronavirus, but nonetheless, it's just making those connections And whether this was a good opportunity for me or not, like, I still wanted to know more about it. So before I actually made this investment, I forwarded this information to my CPA. There's another opportunity I was looking at as well, and I forwarded both those to him. I trust him. He's known me for, dear Lord, 16 plus years. He's also a knowledgeable real estate investor. So I really looked to his guidance on if this made sense for me and for anybody for that matter. And, got the 2 thumbs up back from him saying, yeah, like this was a good investment. So I was able to move some money in there, and that's what I did. And I want to take this opportunity to kind of educate you on this, to show you that, man, there's just so many other ways that you can invest. So I hope that you found this video helpful. Hope you learned something. And if you did, now would be a good time to hit that like button. Also subscribe if you haven't, and also share it with anybody else that wants to know about real estate investing, real estate syndication, and how this all works. All right, y'all, hope you enjoyed it. Until next time, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Peace.